Ladies and gentlemen, welcome to the Sofi Weekly. I almost forgot that. Today, I am Tanner Buffer. On my right, I guess, is the great and powerful Roy Crossroads. And underneath me is the great and powerful Tevis Fun of Investing, part of the Tevis YouTube channel. I don't know. Anyway, we have a great show for you guys just right before SoFi earnings, which is on Tuesday. We're all going to be here with many special guests to listen to the SoFi earnings on Tuesday. But for now, we're a couple days away and we have some exciting stuff to talk about. First off, and the most important of news, Roy, how you doing?
Doing all right. How are you?
Doing good. Did you just finish boxing, as Grim just said?
No. It's we're in the middle of like a cold wave here in Houston, and so I think the high today might have been like 73 or 74. Still very warm, but for some reason somebody had the air conditioning on very cool, so it blows right on me. I'm like, I'm just gonna wear a blanket. So
got you. Tevis, how you doing, my friend?
Good, man. Week before earnings. I got to wake up early next week. It sucks, but yeah, it's all good.
Week before earnings. That's right. So, do we want to jump into some exciting news? Tevis, I gave him a call today while he was working. Let's call it work. And I was asking him about some pretty important updates, I guess, to SoFi that I needed some technical product help on. Do you want to share your tweet, or you want me to bring it up?
You can bring it up. I can talk through it.
Okay. Perfect. Let's go ahead and jump into that right away, because I think that this is important. Tevis, on the screen. SoFi is about to release a huge update. Why is that?
Okay, so basically, if you just go onto the iOS store and you look at their versioning, there's this version format called major, middle, minor, or major, minor. So here you have the version numbers. Those numbers actually mean something in software development. And the reason why is because it's just a more structured approach to releasing software. And really what the version numbers mean is breaking out what the actual release contains in that version. And what we saw with SoFi, if you scroll up, Tanner, you noticed this first, and this is why you called me in the morning.
I don't see an @ anywhere, though. On this whole tweet, I didn't see my name. Tanner called me. Nothing like this. It was so weird. I don't know. Anyway.
Oh my God. Okay, so first of all, Tanner called me, and he was like, do you want to come on the show tonight, and we can talk about it? I was like, yeah, whatever. Just let me know. And then I go onto YouTube, and guess who's live streaming? Tanner on his show. Breaking news, everybody. This is the thing.
I said I invited you to the show, and you said, if we're going to talk about it on the SoFi Weekly, I'd rather just see you there. Those were your words. I said I was going to talk about it on my own live stream. I invited him there.
I post on the chat of this guy's live stream. He glances over, and then he pretends he doesn't see it, and he just carries on, taking all the glory. Anyways, yes, Tanner helped me find this. So what you see here is the versioning. Maybe I can share my screen, Tanner, so I can just show the difference. So let me share. So this is the iOS App Store. You can just Google SoFi app on the iOS App Store. And if you scroll down here, you can look at the version history. And generally speaking, companies will have release notes of what is included in this version. SoFi, just does the same thing over and over again. Although this one is different than the rest of them. There are some.
That was the major update. They finally were able to post release notes.
Well, yeah, I think there's been some in the past that because this only goes into February.
Right.
There's been some in the past that have had different release notes, but that's not the important thing. Look at the versions. 2.188, 2.189, 2.190, 2.191, so on and so forth. And look at the dates. So in software development, you generally have a cadence of releases. So for SoFi, it seems as though they release weekly. Feb 6th, 12th, 20, 26, March 6th, March 11th, March 18th, March 25th. You get the gist. And so really, you can't tell, like, whatever is in the build that's going to be cut on that given day or released on that given day, it's going to enter the new version. That could be patches, that could be, minor bug fixes, it could be minor features, major features, whatnot. And the biggest difference here is that we jump from 2.21 to version 3.0. And then, of course, version 3.0.5, which has minor fixes. Now, there's a couple of things that this could mean. The first thing, if we just go back to the tweet, Tanner, you can share.
Oh my gosh,
because I don't have it up.
Gotcha.
So version 3, when we jump from 2.2 to version 3, that's the big major release. And then my thoughts is that the 3.0.5 is simply bug fixes based on that release. So they're internally testing that release. Generally speaking, you'll have like a gradual or a staged rollout if it's major features. Even if you don't release something externally, which we're going to talk about in a second, how that works, is you'll want to internally test it. So you make sure that you can prepare for a major release. You don't want to release to millions of people and make sure that that version is, not working or has a bug or whatnot. And so essentially, depending on what that version number is, generally speaking, it'll speak to the how big the release is. So major releases are, complete overhauls of existing functionality, are complete overhauls of the back end. And I sort of hypothesized towards the bottom of that post as to what this could mean. So if you scroll down, scroll. Okay, here. So what could this mean? It could mean that the app is getting substantial new enhancements, either new modules altogether. So if you have a new product offering, then you're going to have a new module in the app, a complete overhaul from the UX, so a significant UI redesign in terms of the look and feel. It could also be, Tanner, you had this idea in the morning, a complete backend change, which could have performance improvements. As we know, the performance has been somewhat iffy, security enhancements, or it could have something like Technisys, SoFi moving on to Technisys altogether, right? If we're thinking about the back end architecture transition that this could mean. So if we scroll down, the people who have updated their SoFi app on their iOS or Google Play Store, the app might look exactly the same to them. And the reason why is because generally for large releases, it's best practice to hide the feature behind the feature flag. This means that you'll have downloaded the new functionality when you updated your app, but it's not visible to you until they turn it on, because they're still testing behind the scenes and maybe addressing some bugs with a beta group, or maybe they're doing a gradual stage rollout, which is also best practice. You want to, roll it out to certain groups of people before you roll it out to larger, your entire user base, because you want to make sure that you can control for any things that might go wrong, right? And so really, I think overall, this is a massive hint, and it comes days before earnings. I mean, they've put together the pieces for this 2 weeks before earnings. I mentioned the last weekly, SoFi Weekly, my prediction was that if they really wanted to make the stock go up, they could drop a PR alongside their earnings results. And then you can imagine they double beat, raise guidance, and then drop a press release around, hey, this is our new feature. This is a new, product offering that we're offering. This is how we're going to get to that 75% growth on financial services. And here's how that's going to look. Oh, and by the way, it's live in your app right now. You don't have to download anything for it.
So do you have exact speculation on what you think it is? Like, is this Technisys or is this credit cards, SMB? What are we getting at? I know that you don't know. I'm talking speculation here.
Yeah, I mean, I'm not sure. I mean, my speculation would be, just given what they've mentioned before in terms of the credit card innovation, that there might be some overhaul there, whether they're expanding out that module altogether. I mean, generally speaking, major version releases are not really backwards compatible. And so this is like, if they're changing something in their database schema in terms of how they're architecting their data from a tables perspective on the back end, like this is not stuff that it's like a one-way door type of thing. So that's what I've been trying to think about lately, like right before the podcast, is what could this be? I mean, it could be Technisys, and I think that news would, be significant in itself, but I don't think it would be as significant as a new product offering or some innovation from a user experience perspective in terms of what impact it would have to the actual like perception of SoFi specifically.
Roy, you may just be hearing this news now. What are you thinking?
I am actually very excited to see if it is user interface stuff. Phil Rabin was brought in sometime in March, I think early March it was, from Uber. He was in charge of this. And if you look at the guy's resume on LinkedIn, like I had not heard of him before. Of course, I knew Uber, and I'm like, yeah, this is exactly who SoFi needed to really push out these improvements and changes. And so it's been long enough. And I know these kind of major developments can take some time, but it's been long enough that he's been there, a little over 3 months, that he'll at least have some hand in what is coming out. And so I'd really like to see that. If we get, look, I don't hate the app the way it is. It's okay. But I'd love for them to see and do something better than okay. So, and it could be, that we get some sort of new products, or I don't know. Like I don't know. But I like what Tevis said about it. It makes sense that it is a major change. And I've seen this as well, that sometimes that they'll roll that out, and then when they announce something, then that way it's live. They'll just, it'll be there. So I think that that's exactly right, Tevis. Good job.
I think that it's Technisys and fully taking over as the one core. And this is my reasoning. The app has been live on the App Store for, according to the thing that I was reading, like 7-8 years now. That is the version history that they've been on since they've been on the App Store. They finally went from 2 to 3. Like, I think that it's a massive deal. That is not the same equivalent of them launching a HELOC product or something like this. They've launched tons of new products, and we have not gotten those step ups in app updates in terms of just, major, minor patch, whatever Tevis was talking about. So if it is major, it might not be customer facing major, but it might be major in the way that they are working on the back end in a completely different form.
I think I think you're onto something, because if you look at version 1, version 2, version 3, if you go onto what you were talking about in your live stream, Tanner, because in the iOS App Store, I can only scroll back as far as February. But I think an interesting exercise, if there is more data in terms of the version history that goes all the way back, would be to look at the dates. Sorry, I read the comments. Would be to look at the dates.
Where my dog tags are. That's what got me. I'm sorry.
Would be to look at the dates when the major versions shifted. So when did they get on version 2? Was there anything significant that was announced? What did that look like? And when have new products been launched? So for example, in 2018, 2019, they launched pretty much everything that's on the SoFi app. Like, what did that look like from a release history perspective? So I think that could be an interesting exercise. I don't know if we have it ready to do it right now. I might just do like a separate video on it, but it could very well be Technisys. Absolutely.
So, like Josh is saying, there were a couple updates on the SoFi Plus screen, everything like that. Like I said, I don't think it's going to be as small as something like, I don't know, that would be. But one thing I will say to the people who are saying that their version is still the old version, it might be because this is more of a dormant update, right? They're updating it, and if it is a product release or something like this, that they still need to push it out live, but it's on their, I guess, sort of a drafted version of the app, which can happen.
You got to keep in mind that like feature flags, version controls, all of these different toggles are incredibly common across all the apps that you use today. If somebody is saying, oh, I saw this new feature on SoFi Plus, or I saw this new, like that can be like 4 releases ago. It can be last month that they launched this in the app, and they can have this stage rollout because there's a natural testing period that they're going to have. And I mean, just in my organization, my history, we generally do stage rollouts like 2-3 weeks before full rollouts, and we're a smaller company. So with SoFi, as you extrapolate that number of total users, you go into the millions of users that have this app on their phone. You want to really make sure that you can test for a month or so. And so what you might be seeing, if you're like, oh, my app just updated and there's a new feature, that might be, have been released in February or March.
If Tanner, Tevis, and Roy stood next to each other, a good mother with a comb could do all their hair in one motion. Okay, that's funny. I actually think Roy is the odd one out. I think he's going the opposite direction, but I think it has something to do with the equator or like the Canadian American border. It's like the toilet flushes that way versus the hair flows that way versus the American version. But yeah, very interesting. Obviously, we don't know now, but I really wanted to point that out. I was super, super excited about that. It wasn't like 2.9 going to 3. Like they're just like bumping up the numbers. Anyway, I'm off it. Anything else that you guys found was particularly exciting this week going into earnings?
Probably worth a mention is the short interest is something that we should probably bring up. I don't have the post ready there.
Is there a specific post that you're looking for?
It doesn't matter. I mean, short interest is still very high going in. I believe it was basically about the same amount. And it's just shocking to me. Between that, actually, bring up Tevis's one image thing. I thought that was great. And I'm not just saying that because he's on Bootleg Weekly with me. But
nice, we're doing Tevis tweets today.
Like, I'm a big graphics guy, and if you have this here, I'll throw it up if you don't have it.
Sorry, I was getting the short interest, and then.
All right, so he's got it all right there. Love it. Do it every single time, Tevis. This is your job now. But I mean, he goes through everything. And just the short interest right here, 180, almost 5 million shares, almost 18% short interest. Of course, this is lagging, so maybe that's changed a lot since the last official data point. I doubt it. And it's just shocking going into this. This is a company that is profitable, and consensus is 0.00 nothing, like no EPS. It doesn't even round up to 1 cent. I don't know what people are smoking. It's absolutely crazy. You can see the progression, the earnings right there. Great graphic.
I don't know. I think that's a normal consensus. Like SoFi said they're going to bring in $5 to $10 million of net income. If you believe they're bringing in $5 million of net income, that's zero.
Well, no, this is what I'm saying is crazy. Sorry. For interest.
I bet.
This I think is silly too. Like I don't. If you're following SoFi for very long, not to believe them in guidance, that they are always sandbagging. And the time when they don't sandbag, that's when I'll say, well, I can't say that anymore. But no, the short interest is it seems reckless, especially given the other piece here is, of course, we had PCE that came out today. And it was basically on consensus. It's falling. A lot of commodity price action I'm seeing is falling a lot. I was actually looking at selling a little bit more silver, physical silver, just because I'm like, it's a good price. I've had a lot of this for a long time. I'll keep some of it as a hedge, but no, silver, when I looked at it, I think last week at this time, it was like close to $30. And it just dumped, just like the stock market did earlier this week. So it's like $27. Wheat's falling off a cliff. Copper, oil. I've heard. I didn't look at WTI today, but no, I think that there's a lot of disinflation going on that it'll start to be priced in, even more so in CPI and PCE. And rate cuts are. I haven't looked at the update from today, but. It's still looking like the consensus is that we're going to get a rate cut in September. And I've been skeptical of that before, but I would be quite surprised if there's not something done in September, even if it's just a quarter point. And all those things basically to say is between earnings, we see the rotation, and I know SoFi is not small cap, but it's treated like that sometimes. And also with rate cuts, it's just like, having this stock short at 18% seems really reckless and insane.
I mean, look, the reason I posted those 3 images in particular together is because I think they tell a story. This company has a very incredibly consistent history of beating analyst estimates. Analysts are estimating nothing, and people are betting on the fact that, analysts are going to be right. And
Not just right. I think like if you have 18% short, you're almost betting that it's even worse.
Absolutely.
And I don't understand it. Especially unless somebody's like, hey, no rate cuts ever, higher forever. It's like, even then, SoFi's fine, and it's still weird, but we know, I mean, even at the hint of rate cuts a couple of weeks ago, and actually the stock's been doing pretty well compared to the overall market. We can see that in the stock price. It's not small cap, but it's traded a bit like that, especially as the narrative is on those rate cuts.
Well, I shared this post with you, Roy, on our private chat. The Russell has broken out of this 3.5-year downtrend. Here, let me throw it up. And I think that's significant. And the reason why I think that's significant is because we know that SoFi moves in line, with small caps. Here, let me throw this up on screen. And this speaks to, what Roy's saying with regards to that entire trend, right? You can see it could retest it, absolutely. And this is technical, so take it with a grain of salt. But we're moving upwards on the expectation of the rate cuts. The markets are now pricing in at 100% that we're going to have rate cuts in September. And small caps, which have been disproportionately beaten down by higher rates because they're perceived as riskier. I mean, not all of them are profitable. Not all of them have the same prospects, or not all of them are safe havens like the mega caps are. Those ones are going to move disproportionately higher when rates start to come down. And the fact of the matter is that SoFi moves very much in conjunction with the Russell 2000. And that bodes well for SoFi in just the coming quarters. And I think that Q2 seems to me to be the last sort of hurdle for the company to pass. And if they do really well, we know that per their own guidance, Q3 and Q4 are going to be much stronger. And the company is going to start to actually accelerate, diversify their revenue streams outside of lending, reduce their dependence on that single segment. And by doing so, diversify how the market perceives them and probably get a hybrid valuation in the process. They just need to pass that last hurdle of Q2. And I really think that after that happens, institutional ownership, which is now, I think, at record highs, we can pull up that chart as well. I think that's going to continue moving higher. And I think the short interest is going to start moving down, and the stock is going to start moving up because there's macro tailwinds and there's company-specific tailwinds that are all working together.
Now, I don't think short volume necessarily correlates exactly one-to-one with short interest. But I can bring this up really quick. The daily short volume, if you go through and look at what we've seen since May, it can be anywhere between lows of 12% on very specific days, but really in the ballpark of 17% because some highs in 22 and 13 roughly. But the last week or so, we've gotten 11, 12, 11, 11, 10% in the most recent day, which was Thursday. That doesn't mean that the average short interest is going to fall, because it doesn't mean that the old shorts are going to continue to cover or rebuy the shares. They could continue to cover and pay their premium. But it is interesting to sort of see, is this a earnings related dip in short volume, or is this a rates are coming in and people are a little bit scared to get caught with their hands in the cookie jar?
Well, so the shorts tell one story, and if you can throw up my screen, this is the other side of the story that many people don't see. Institutional ownership, look at that trend line in terms of, what that adoption is looking like. And on one hand, you can see the short interest and you can say, okay, everybody's betting against SoFi, but this institutional ownership keeps climbing higher and higher on the back of the profitability, on the back of the good results that the company is reporting. And that trend doesn't seem to be stopping. In fact, it seems to be accelerating. So, that also, I think, tells a story of where that attention is going to go, and that could be a leading indicator for where the stock goes.
You're muted. You're still muted.
Oh, okay. Sorry,
There
I
you
don't know how I got muted. Anyway, I think that this brings a very important point where we should all listen to Roy, as Chris says, and aptly, Roy, you're selling SoFi.
That's right.
What the heck's going on, man?
Selling cash secured puts. So for if you're not used to options, what that means is I've taken on options contracts, a good number of them. I think I initially did this maybe Wednesday of the week. I added more yesterday and then today, and I'll probably do more on Monday as well. Agreeing to take on more SoFi if the stock price is at or under 650. I know there's exceptions, but next Friday. So it's an earnings play, decent amount of premium, especially earlier in the week. And I'm happy with buying SoFi at a net of like 630, 633, 635. It's stupidly priced right now. I'm not expecting like a great earnings or anything, and it absolutely could fall under 650. So I'm fine with that. If that happens, my SoFi position has more than doubled. And I'm good with that.
Many like cash secure puts down? Is that you're going to double your SoFi position if it goes to 630?
So I had a lot of money come in. Finally, the rollover funds hit. I had some other funds that hit as well, all at the same time. And so it's the most money I think I've ever had at one time just to put in the market. And I'm not doing it all at once. I'm good getting assigned. See, that's the thing, is the way that I handle options is if I'm selling covered calls, I have to be okay with selling the stock at that price. I might roll out depending on what happens. And likewise, if I'm doing cash secured puts, I only do it in stocks that I'm interested in owning and only at a price that I'm comfortable having it at. So if I'm like, hey, I want to buy SoFi anyway, why not do cash secured puts? I have a lot. If I didn't have any SoFi, I'd just be buying the stock. But I have a lot. And so I'm like, I want it, but I want it very cheap. And yes, I know it was under 630, whatever that price is. Previously, I didn't have the funds then. So, and if SoFi instead does the opposite and it goes up to 10, 11, 12, 13, it's like, sweet. I just get to keep the premium. I have a lot of SoFi already. So I'm happy either way.
But what are the types of premiums that you're getting?
So it was 20 cents per for the ones I think I sold on Wednesday. I think the lowest I got was 14. So it's not amazing, but it's just, SoFi it's actually done well the last couple of days. So I was actually really hoping we get one more good big red day, and that would really add to the premiums a lot. But it's like whatever.
So it would really boost the premiums because the sentiment would change, thinking that the market is going to reach that price, right?
Yeah, it's both the delta changing. So delta changes based on the movement of the stock price. If it goes down or up, it tells you the delta amount is the amount that changes. Gamma is the rate that delta changes, and so those factor in. The biggest piece is the implied volatility, and so as the stock is volatile and the target is moving down, then if you're looking to sell puts, that's just the best thing. It's the opposite too. If I'm not selling, I actually don't have any covered calls yet for SoFi into earnings. I might do it for like 11 on some of the shares, probably not many. It's just hardly worth a premium right now. But if we had like a massive spike on Monday and it's trading at like $9 for some reason, and it could do that. We've seen that happen before on earnings day for SoFi or the day before earnings. In which case I might sell some just because when we have upside volatility, delta is helping increase the contract amount. I might get a few cents a share per contract out of that for something that's stupid. Like, I don't think SoFi will be going to 14 in a week. Love to be wrong, but
yeah.
Okay,
so just because I'm learning options now as well. On these cash secure puts, essentially, what's the downside? Like, obviously, if you're wanting to purchase SoFi at 100 share lots, and you're essentially getting paid to make the bet that if the stock continues to go up and you have a lower price, then you're just going to get paid once that expiration date passes. But if it does reach that price, you have the option to then get assigned those shares. What's the downside?
The downside is, and by the way, loving the comments. Thanks, guys. The downside is that of two things. A, you're chasing premium in a stock that you do not want to own. I've done that before. The stock Microvision MVIS back in 2021. I was like,
I get that. I don't mean that. I mean, like,
look at Matt's comment. It's basically the opposite of a call, right? A call, you're capped at what you buy it at. Like with this, if it goes further down, if it goes into the fives, he has to buy it at 630 or 650 or whatever.
Yeah. And that's really the downside, is that it falls much, much more than you expect. Some catalyst or event comes out and it just like, insider trading and SoFi is somehow Enron, they've done a CrowdStrike type situation. But if you were like wanting to get more shares anyway, and you were going to buy it at that price regardless, there really is not much downside. It's just, you get to keep the premiums, or you get to have shares that you thought were cheap.
This seems like the only way I'm going to buy stock now. Or I guess if you are actively looking to buy shares and then it doesn't reach that price, then you're left with no shares and a very small amount of premium.
That is the other downside. Is if I did not have any SoFi, I would not be doing this. I would be buying SoFi stock, just because I'd be afraid of the opposite happening. Expectations are so low. Maybe I don't get assigned. Great, I keep my premium, but maybe SoFi goes to like $12 a share. I don't think so, but if it did, I'd be like, man, I knew this was going to go up. I don't have a position at all. I'm mad. But I love to do it when I already have a position built. So I'm doing this with Nubank, by the way, especially into earnings, because I'm like, hey, I'm comfortable with where they're at. I'll go ahead and sell. The premiums are not great there, but there's a lot of volatility, implied volatility around earnings. And so there's a much greater premium just because there's a implied move in each of the stocks based on earnings. And so you can sell covered calls or sell cash secured puts. I think it's better for me anyway than buying them into earnings, just because you need a large move to actually make something happen. I think the other thing too is you just get too greedy. Like you even if it's in a stock you love and a position that you want to build out, you say, okay, the thing that matters most to me is premiums. Now, if that's your goal, that's fine. But a lot of times we're like, for instance, I'm with Palantir. I do not want to sell the shares ever. I mean, like not for 10 years or whatever. So I have to be ready to roll those out or put it at a very cautious level. And so I've been consistently selling above 30 just on weeklies, and I'll go well above that. I'll probably go like 36 or 37 into earnings, just because I think this is going to be a great earnings. And I don't want to sell the shares. And I'll build in if it goes up 30%, I'm still okay. That means very low premiums for me. But if I got greedy and chased premiums, I'd be like, it's not going to go over 31. The premiums are ridiculous, but maybe it goes to 35. I'll be really upset with myself then. So just know what you're comfortable with selling and buying at. Make sure you do it in a stock that you like. And if anyone else, here is like, I want to learn options and do this, paper trade them for a while. There's a lot of good instructional YouTubers. I think TJ might be in the chat. TJ is somebody to follow and learn from. I practiced for 6 to 9 months before I was really comfortable doing it, other than just like a very small position.
Good platforms to do it on too. Not on my own stream, but
but I mean, I just love it. Like, so today I went, I had to do
I cannot believe that didn't make you laugh, dude.
I'm just thinking about the money from the cash secured puts and the covered calls. And so, but I sold, I've been selling throughout the day, and then I decided to allot some more money there. And I think I went to Panera Bread just for a drink. I'm on the Sip Club, and my wife's like, hey, what took you so long? I was like, I decided to just pause for a few minutes and make $250, selling cash secured puts. It's like, I
think I might do this on SoFi and a couple other names like tomorrow, like especially for SoFi going into earnings. Like, as long as I do it with a small amount, I'd be happy to build the position. And if it doesn't, all right, I made a little extra money.
Yeah. I especially like doing it in a tax advantage account. At least here in the States, you pay much higher tax rate on short-term capital gains. And so if a lot of I do for my wheeling, and for my options are in the tax advantage account. So it doesn't matter if something gets exercised and goes away or not. Doesn't short term doesn't matter. I'm just paying taxes on part of it when I get and I start having to take those withdrawals from the IRA, and on the Roth never. So I can make as much money as I want on that versus the individual retirement or not retirement account that I have. Those are all short term gains, so I have to keep that in mind when I'm.
How am I going to lose my money selling puts? I'm just going to end up with SoFi shares.
Yeah. Selling options is a lot safer, I think. There's still some risk. Don't let anybody tell you there's no risk than buying options, especially naked options. But I love selling them all day. And there's less upside for sure. There's times when I buy options, but largely I have my core shares, and then I do some wheeling, and I have a few leaps.
Got you. What's the next topic of discussion today, Tevis?
So a couple things. I was just looking at a post, and I'm just verifying it. Looking on LinkedIn, there's a whole bunch of new roles that SoFi is hiring for, particularly with home loans specifically. So it seems as though, from a hiring perspective, that they're ramping up that Wyndham side of their business. I'm just looking at it now, mortgage processor, whole bunch of home loans, processing manager for home loans in Charlotte. They're hiring all these people, and all of these jobs. I mean, I filtered by past week, and it has 129 results, 32 results in the past 24 hours. Like, they're really getting ready to ramp up. And I mean, generally speaking, they're hiring a lot of people in risk and a lot of people on the banking side of their business. That's their biggest single segment of hiring. But a lot of people out of North Carolina in mortgages specifically. I found that particularly interesting. I mean, of course, this is all stuff that we're talking about today, and it's going to become fairly redundant by Tuesday because the SoFi executive team is going to be talking about this stuff on the actual earnings call as part of their guidance for the rest of the year. Mortgages, as rates come down, the home loan segment is going to be ramping up. Wyndham Capital is going to be ramping up. Student loans are going to be ramping up. And SoFi is getting ahead of that curve to already prepare for this ramp up. And we can see it even right now. If you just go on LinkedIn, you go to SoFi, you filter by their jobs over the past week, and you start scrolling, you'll start to see trends.
Gotcha. Anything you're noticing there? Aside from just the mortgages?
I got something. If
Go ahead, Roy.
Go for it.
Throw this. Actually, let me share it so you can. This is not SoFi, but it comes right into this. Oh no, there we go. So Robinhood, I popped on my Robinhood app today, and it said, hey, there's a 5-minute survey. It takes more like 10 minutes, but whatever. And I found it really interesting because they're talking about Robinhood gold prices and everything. But let's skip all that because this is SoFi Weekly. They were wanting to look at different services that they could add to Robinhood Gold that would be attractive. And they had more than just these 4. But one of them that they mentioned was discounted mortgage rates. And so I was like, I'm really interested in that. Of course, alternative assets, educational stuff, premium lifestyle benefits, actually having a professional services and everything. But that right there was what I was really interested in. They asked, when I was kind of thinking of purchasing a home, if they did provide an offer, what is it that I'm actually looking at? And the wording of this was really interesting. If Robinhood provided a mortgage offer, so it seems like more than just a referral service. Maybe they're looking at an acquisition. And of course, they had some questions of like what the monthly paid feature would be worth in that scenario. So I just thought it was an indication, and I've seen this not just from Robinhood, but a couple others as well, this anticipation of when rates are cut, then the housing market really starts performing a bit better. Like, it's not going to instantly change in 1 second, although maybe it will, depending on the size of the cut. But that seems like it's coming, maybe not so much later this year, but early next year, especially in spring when it's just usually the hot season for selling homes. I think SoFi is going to do very well here, and of course with student loans as well. to the point where, I mean, when you see somebody like Robinhood, and I know that they want to democratize finance, and this is part of finance, but when they're at least thinking about getting into this game somehow, there's something there.
Does Robinhood partner with many third-party products or anything like this, the way that SoFi does with Lemonade for their insurance products, or anything along those? Can you think of examples where Robinhood is partnering with businesses?
The cash sweep program, they have that, and as well as the FDIC insurance, but I can't
I
think
mean
of.
something where like they really put the name of another business on their website.
I don't think so. I can't recall anything. Maybe one of our viewers knows something, but yeah, they're not like SoFi in that regard at all. That's why I'm thinking I don't know that they'll be issuing the mortgages themselves, just because they're not a bank. So it's much harder to do that without the banking license. So I don't know that this is really direct competition, more than just they may be acquiring a company that'll be a referral company that doesn't actually issue the mortgages themselves. I don't know what that would be. It just
There's a big Canadian brokerage here that we have called Wealth Simple, which might be compared to Robinhood of sorts. And they've recently gotten into mortgages, but they're working with a company called Pine Mortgage. And depending on the amount of assets under management that you have, you're going to get discounts or rebates on your mortgages based on the amount of assets that you have at Wealth Simple. So
can you send me that link just when you have a chance on X?
Sure.
Because that would make a really good post. That makes a lot of sense with what Robinhood might be looking at doing. But yeah, it startled me that Robinhood was looking at doing this, and it's like, maybe in the future, but no, this was one of about 6 ideas that they had of ways to scale value for Robinhood Gold. And so I think this is bullish for SoFi. SoFi actually has a very strong advantage here, just because of the rates that they can offer, and also the amount that they can actually cover, and they can do it directly because they have Wyndham Mortgage and the banking license. So it's a matter of time.
So if you can just throw up my screen, I'm just looking at the open. I think this is like the cleanest way to do it. You can look at the number of openings that they have. This doesn't filter by the most recent, like LinkedIn would, but it'll just give you an idea of the aggregate numbers. Data is a really big category here. So data scientist, machine learning, data engineer on the data platform, so on and so forth.
Isn't there risk as one of the things? Because I thought risk was the biggest one before. So I'd be curious.
Yeah, so data has 11, engineering has 17. This is general, just engineering. Finance, human resources, mortgage has 7 openings. So loan originator in 4 different locations, processor, so on and so forth. Operations, sales, and service, mostly fraud. Operations, director of fraud management. Product risk is 17, and then SoFi Bank is 20. So if you were to do the top 3 categories, it would be bank, risk, engineering, data, then mortgage, and then everything else. Yeah, I mean, risk is always very, very large in terms of hiring. They're always looking for people in their risk departments. And then in SoFi Bank, you have a mortgage people here as well in SoFi Bank. So they might be doubling down, I guess, on some of these roles, what category they include those people. But yeah, a lot around mortgages, and I think this is a good indication if you ever want to see like, hey, what are they focusing on right now? The data aspect as well is pretty interesting. I mean, if we just want to put our tinfoil hat on and we just say, okay, let's just say the 3rd version of that app, the 3.0, is something to do with Technisys. They might just be getting smarter at making decision making in the app, specifically leveraging some type of machine learning. These are not Galileo hires, right? Galileo has a specific page where they hire their own people. Theirs are almost exclusively software engineers and data engineers. So this is just for SoFi specifically. So I don't know, fairly interesting. I don't know how indicative it's going to be, but still interesting to look at. Just looking forward for where the business is going.
Yeah, no, that's very interesting. I really want to cover uh, a myriad of different other fintech pieces that Crossroads has covered, like PayPal Fastlane launching and stuff like that. But I'll wait till the after hours show to do that. Um, what other SoFi news was there for the week that we have not covered yet?
I mean, the Galileo podcast, but I have not had a chance yet to.
The Ark stuff too.
Yeah, that Ark would be good.
Also,
would.
are
Ark
bank
selling?
numbers out yet? Because I know sometimes they come out on the Friday before earnings, but we're reporting on Tuesday this time around, so I'm guessing not yet.
Are you talking about Ark selling?
Yes.
Yeah.
So I'm under the belief that Ark did not sell. Are you guys in a different belief than me?
I know nothing about this. I haven't read up on it.
Roy?
I didn't look at the Ark actual filings, so did it not have SoFi on there?
So if you look at like Kathy's Ark, like one of those things where it actually tracks her buys and sells, Kathy has not sold SoFi. Okay, and that's on a day-to-day basis.
Is it just outflows?
Right. Exactly. So the fund has shrunk between the Q1 numbers and Q2 numbers. So they, without changing the weightings of all their funds, just essentially across the board, she's sold every single one of her positions because it's smaller than it was back the last time they filed. So like the selling, quote unquote selling, is like saying, the S&P is selling Nvidia. It's like, I don't know. Like if the S&P goes down, they're selling everything. Like it's just total outflows. That's it. And yeah, it caught a little bit of steam, but I would not worry about that. That's just people not betting on Kathy, not Kathy not betting on SoFi.
Yeah, I for some reason I'm struggling to pull it up, but I get those emails from them.
It wasn't in the emails because I checked the emails after the news came out and I didn't see it there either.
Exactly. It was a 13F filing for the quarterly changes of the fund, right? That her position in SoFi has gone down quarter over quarter. But if you actually look at her purchases, what she's buying and selling, there's been not a day that she's sold in my memory over the last 3 months.
Yeah, so it's like a nothing burger basically.
No, it's just people are not unfortunate to Kathy. They're just here. I'll show you guys once again because I just did this on my live stream.
And and plus, I know we talked about when Kathy has bought in the past. So I think it's fair that we talk about like if she were to sell. I don't think this counts as a sell in my mind, but
it's not.
You gotta keep in mind as well. Like just go to Fintel and look at the institutional ownership changes over time. And you'll see that Kathy is not like the end all be all for this company. There's a lot of funds that are adding tremendously to their position.
But the one stock that when she sells and buys to really pay attention to is Tesla. Like she kills it on that one. If that's all she did, she'd be the best fund in the world, honestly. But any other stock, I don't know why she does and why she buys what she does and why she sells what she does. So I don't read too much into it other than when she starts selling a stock. And that was one of the concerning things. And I hadn't had time to look at that. So I'm glad you clarified. When they start selling a position, it's usually, unless it's it just got too big, like when Tesla ran or Nvidia ran, they're usually looking to close the entire position.
She can change the weightings. But that isn't what we're looking at here. The weightings are the same. The outflows are different.
Yeah.
So this is April 1st. Okay. You can see at the top the O and the C that's open and close. It's anywhere between $50 per share. Now, assuming that this fund has the same amount of shares, then the inflows are, going to control the price, which last time I remember, this is a closed fund. On July 1st, which is the next quarter, so this is a 3-month time period. So this is the end of Q2. We're at an open close of about $44. So it's gone down roughly 12%. How much did SoFi go down? 10% in the 13F filing. So she actually increased her holdings, like, to negate that small change in the amount that the fund overall has outflowed, right? So it's actually positive news. And I'll just do this one more time. Ark F, if we're looking at that one, maybe her more prominent fund that people look at for SoFi, open and close, $30 ish. July 1st, $28 ish, $27, $28. So once again, outflows overall. The weightings are what we're worried about with Kathy selling, right? We're not worried about whether she's holding $10 million of NVIDIA or, whatever. We worry about if she's buying if she's selling things to buy more, or if she's selling SoFi to buy something else. She can only have so much cash in the position. ETFs are kind of weird. Like, actively managed ETFs are so weird because you cannot have large cash positions. You have to deploy it. And this is why you see her selling new things to buy other things, and she can't prepare for ups and downs. And it's almost designed for her to, perform badly in certain areas of the market. But she's a net buyer of SoFi shares. She's never sold a share to buy something else. That's all I'll say.
Yeah. When that happens, it probably means, unless SoFi is really run, that she's getting out of position. So I don't see that. She seems to really like it, especially her interactions with Anthony Noto. So, look for those net new outflows.
Yeah, exactly. Okay. Anything else that we want to cover here, or on previous days? Let me just see. I covered the Marqeta 2024 State of Payments report, and it was just saying, like, US is super getting into digital banking, and the amount of people saying that they'll be worried about going to a cashless society is dropping at very fast rates. So I think that those are the two biggest takeaways, if I'm to sum up a full-on report into a couple sentences. Roy, I don't know if you know this about me. I'm a big total addressable market investor. A big total addressable market investor, not investing in Palantir.
Somehow.
Yeah, bingo. But essentially, those are good signs, right? That means that the overall pie is growing. What percentage of that can SoFi grab? That's up for them, and that's up to management. But yeah. And another really small piece this week that I thought was interesting, Bank of America once again had the chance to take out their competitors, and they chose to buy back their own stock once again.
Oh, Tanner, did you hear about the Revolut news?
The going public? What news?
No, the UK banking license.
Yeah, that was a couple of weeks ago, right? Or no?
I saw it this week.
Okay.
That they got a banking license after waiting for like 3 years in the UK. But I think that
now they're going to get sold off. Is that the joke?
I don't know. I found it interesting. I mean, it's not really relevant to SoFi. They don't operate in the States. Do they? I don't think they operate in the States. And they would need a US bank either way, right?
They must operate. They operate in 34 countries. So I assume that's in America. Here, let me check. I don't know why I know that they operate in 34 countries.
Yeah, they do.
Yeah, okay.
Yeah, this article that I'm looking at was from The Guardian, posted yesterday. So they got a banking license after a 3-year wait. Here, I'll put it up on screen. Does it matter? Probably not, but I would love to get your thoughts.
No, I think they're to go public. They have the most egregious valuation right now. It makes Nubank look like SoFi compared to Nubank versus SoFi. Like, it's crazy. They make less revenue than SoFi does at a $40 billion plus valuation. Now, they are growing extremely fast and have quite an amazing product. So I'm not going to take anything away from them, but valuations have to line up here, for what they're doing. In terms of the actual banking license or anything like that, I don't think that that's anything to look at. I mean, PayPal has a banking license in Switzerland or something like that. Yeah, doesn't matter. You have that. Oh, okay, sorry. That was the same article. Let me just go through and see. Yeah, I think some of the conversations that I want to have are more for the after hours show, just talking about a couple other names. We have one more. Last story here before we leave. Galileo Financial Technologies adds 3D Secure to bolster online fraud protection. What did you guys think? Anything?
Yeah, I mean, this is something that's definitely needed. We've seen that with a few different companies. Of course, Google. It's not quite fraud protection. This week, the last couple of weeks, because of CrowdStrike, protecting data and of course protecting its fraud. That though this is a little bit different thing, has gotten the headlines. And so yeah, Galileo has some really good products. And so I'm glad to see that do well. PayPal, of course, was able to, through DraftKings, I believe, sell one of their fraud protection products to them as well. So I think a lot of companies and a lot of people will be looking into that. And it's great that Galileo is continuing to grow and innovate and make these sort of moves.
I think that this whole thing, you just need to read here. Card not present fraud is expected to make up about 73% of total card payment fraud loss in 2024. Using 3DS or 3D Secure, it can dramatically reduce fraud rates up to 6 times compared to non-3DS transactions. So card not present is an online transaction anywhere where the card is not actually physically communicating with the terminal. So yeah, very interesting. Happy to have it. And potentially this either adds to increased revenue per client or a potential amount of clients that were looking for this type of product where they didn't want to be liable for the losses and they wanted to put that to the issuer of the cards. Well, you're going to need 3DS to do something like that. So yeah,
there's a lot of legacy companies that maybe would have been fine before the AI moment through ChatGPT, but fraud has gotten a lot more savvy using these tools. And usually the defensive tools and prevention tools, especially if your company doesn't do that for a living, lags a little bit. And so I think that this is a good tailwind for the company.
I think that is it, ladies and gentlemen. Actually, can I do one more?
Sure.
Can I do one more? I didn't even cover this on my actual thing, but I think that this is important. So what is his name? John something at Galileo was recently on talking about how security has always been their number one issue. And now seeing what's happening with Synapse and Evolve and all of these things, that people are getting a little bit worried about which banking as a service, partner that they're actually working with. I just want to show you guys, Jason Mikola posted this thing that I think is just crazy, talking about how bad things can get, essentially. I want to share this with you. This is why, stop working with just the little companies, work with Galileo, because you don't want to have your customers feeling hopeless. This has become dragged out so long that I legitimately forgot my life savings are missing. I feel so hopeless that the money I worked for so hard has been ripped away from me and the government doesn't care enough to fix it. How is citizen income not a main concern? No one is focused on this nearly enough. I have to say this thread is one of the things that keeps me going, and I appreciate everyone. Anyway, if you guys don't know the full story, Synapse went bankrupt, which is the connecting partner between Evolve. Well, Evolve was the main bank, but many banks and the many, many fintech solutions that need to keep their customers' money at those banks. So Yada, for example, Yada Bank was one of them. And so people have just been not able to get their money. And, solutions like, FDIC are not in place to deal with this at all, because they are there if the bank goes under. But that is not what happened. The bank middleman went under. And so nothing is there to protect anyone. Big problem. Galileo, Sofi dealing with a much more mature, much larger banking as a service provider can be a game changer. And these sort of situations may see massive growth for Galileo. Where does Yada go next? You know, where, honestly though, where do they go next? Maybe Galileo. Ladies and gentlemen, thank you all so much for watching. Really do appreciate your time.
Just before we log off, we will be covering the SoFi earnings live on Tuesday morning. We won't have a chance to, talk to the audience until the earnings. So make sure that you join us. I think the call is at 8 or 7.
Well, we got to be up for 7 because the actual report comes out. We're going live at 7:30. So we'll have 30 minutes to cover what happened, called at 8 till 9. And then we'll do a 30-minute recap on the other end. So we got a 2-hour schedule, but you guys can just come in and enjoy the show.
Right.
But thank you all so much for watching. Really do appreciate your time.
Later.
It's bye for now.
Earnings Tuesday morning, guys. Bye for now. Bye.